June 16th, 2025. This is the S&P 500 E-futures mini on the 2000 tick chart using NinjaTrader 8. What the chart looked like today. Carryover from Friday was kind of a spike in a channel, but it looked like actually just one big spike here, one big leg, then a more gradual channel here, which is this yellow one that I found, kind of hits the top and then sells off in this blue down channel. There wasn't really any economic data today that would move the markets. And this week, actually starting today, there was a contract rollover, or not today, but by Friday, the M25 ES contracts are going to expire, and we're just going to start trading the ES U25. But you can already start trading the U25, and that's what I did. So it's September 25th. And as you can see, the volume is quite high on both. And as you see, as we get closer to Friday, this volume is going to increase, and this one's going to taper out to nothing. And then on Monday, this one's just going to be gone completely, and you'll have the ES U25. So keeping that in mind, this week on Wednesday is also the FOMC rate decision, which I think everybody believes that there's not going to be a change in the interest rate. I mean, it doesn't mean that there won't be further down the rest of the year, but I think everybody already expects that. And typically on the Mondays and Tuesdays of that week where the rate decision is going to be announced are really slow. And today was no exception, and I anticipate tomorrow will be even slower. Now, despite this nice leg up and down, I didn't really see that many setups that were worth taking. I actually took one trade today and it was a loser, unfortunately. We get into that, and in hindsight, after more thought, it was actually not the best setup to take, but in real time, I thought it was good, and that's probably just some more improvement I need on my part. So, pre-market, it spikes. I saw a potential setup here, but I really didn't like it. Looks like it's a new high. It's a first entry long pullback, second entry long bounce off the EMA. This yellow up channel doesn't exist yet, but it did have a bounce off the EMA. But in real time, I saw it as or at least I received a bearish signal bar. So I'm not ready to go long yet. Then the follow through trigger bar is a nice bullish candle. Now, this is maybe worth taking a trade. Unfortunately, this happens within the first minute of regular trading hours, and I'm hesitant to take this setup. I mean, it seems okay, but it is, in my opinion, mediocre to take a risk when it's so early in the day. If this was more bulletproof or even better, like this had a great signal bar, clearly the move up was going to keep going, then maybe I would have jumped on. But being right at the first minute, I'm extra picky, so I left it alone. It would have worked. Price then continue moving up. It's the sideways consolidation. This is just choppy sideways price action. No real setup that I like. EMA is starting to hold support. I drew this as a potential channel up, and initially I actually had this a little bit tighter here. Then I had an overshoot here, so I'm expecting a potential overshoot back down here, but it comes down and it continues up again. So I'm watching this carefully. It looks like it's moving up this orange up channel. And as it hits this, that's actually when I extended my channel up to about here. So actually this fits pretty well. One touch, two touch, three touch. Break of this orange up channel, comes down. I'm looking for a bounce off the EMA. You don't get it, and it just keeps going. Then it comes back down, test the EMA. So it's actually only a first entry long, and that's all you really get. So I wasn't prepared to take a trade here. Plus the signal bar is iffy, and inside this guy pushes up. It's pressing and pushing against the highs. It moves up this purple up channel, has a small little break, comes back down. I'm looking for a first entry long. Technically, a first entry long comes back down. There might be a second entry long here. Second entry longs confirm when this candle opens and closes. Unfortunately, I'm not ready to take a trade when I see this candle because it closed below the EMA. It could be part of this green down channel, so I'd be potentially buying into resistance. So I left it alone. Once I see this as a first entry long pullback, second entry long, I'm looking for a higher low bounce off this EMA. This could be a higher low, but I don't like the signal bar. This could also be a higher low, but again, I don't really like the signal bar. I needed this to close bullish, so I'm watching and waiting. This is definitely not worth a higher low now because it looks kind of bearish. It is neutral, closed below the EMA on a clearly bullish day or bullish time. Pushes up. So if you did enter here, you would have gotten filled. And then this candle probably would have stopped you out. If it didn't, this one would have, because this one actually ticks below here. And your stop probably should be right here. Then it pushes. It breaks out of this orange down channel. Now, initially, I actually drew this wider. Well, I'm going to go ahead and this is where I took my one and only trade and it failed on me. And in hindsight, I kind of saw why it failed and why it wasn't a good trade. But in real time, I had something like this. So I'll go through my thought process. I was thinking I'm in this orange down channel. It broke out, made a new low, first entry short pullback. I'm thinking there's a potential second entry short here. I like the close of the signal bar. I saw it as a failure to break through this orange down channel resistance. So it's like one attempt, two attempt, three attempt. And I'm thinking there's enough for a quick 1 point scalp. So this is actually, I did a data reload, and this one, this candle is actually, this entry should be on the second candle. So actually should be on this one. Unfortunately, NinjaTrader has it here. What happened was the candle, that's this one now, it broke below this candle. I entered and it came back upwards. It picked me up on the way up. Then it stopped me out because my stop was here. So this trade, my one and only trade, failed. Now I look back and I thought, what could I have done differently? So I'm just gonna make my life easier real quick and scroll this out. So there's several things wrong with the way I interpreted this chart. The first being, I shouldn't have had it this wide. There's no justification to make this channel this wide yet. I need more price action to increase it like this. The channel is actually this way. Should have been tighter like so. This should have been the channel. So it actually should have been break of this orange down channel, break up, test the low, and then made a second attempt to go even lower. So in real time, if I had this yellow up channel probably still wants to test the high. This is the first break of the yellow up channel, made one attempt. This could be the start of a second attempt. Seeing this, you also already have a break of this orange down channel, made one attempt and tested low again. So now it looks like it could be potentially reversing. The initial idea that I had of this, well, what I had previously is too wide. So I should have been trading this, and that probably would have kept me out of trouble. On top of that, if I decided to take this trade short, my stop shouldn't have been above this guy, especially when this one is forming. My stop actually should have been right where this line is. So this is 6105, should have been at 6125, one tick above this technically. It looked like there's some kind of resistance. If I wanted to be even more, give it more room, it should have been above like this by one tick. But let's just say it was above by one tick here. As this is coming up and I'm short, I wouldn't have gotten stopped out here. I would have had to sweat it out. And then this candle likely would have given you the 1 point scalp. So this has happened to me previously, I think a few days ago, where I kept my stop too tight where it shouldn't have been because it didn't make sense to keep the stop there. Should have been actually where the obvious resistance or the obvious support was, depending on if you're going long or short. If I had kept it up here, this trade, although being a bad setup, bad entry, bad read of the chart, I would have survived if I followed that one rule. Unfortunately, I didn't because I think I was thinking I want to minimize the risk, but minimizing the risk is fine, except I need to accept the fact that sometimes the stop doesn't go where I want to minimize the risk so much as it needs to go where it's obvious where the price action is respecting. So unfortunately, there was a loss. I think could have been an avoidable loss. First thing to avoid was the setup wasn't the best. The second one was, okay, if I was already in the trade, the stop should have been up here and I would have survived. Fortunately, I didn't do either of those and I took a loss. Then prices continue moving down. The second entry long here is bad signal bar. I don't really like this. Starts moving sideways, creates a new low here. It's a first entry short, and then that's all you get. It keeps going, makes a new low again. Again, first entry short, kind of a double bottom here. This one's actually slightly above this one, so you can say it's a first entry short, potentially a second entry short, but this signal bar isn't that good. This blue channel was treated, I did have it as a blue down trend line. So it looks good because it's a fourth touch rejection, one touch, two touch, three touch, fourth touch. Unfortunately, the signal bar is a little bit too neutral for me. I needed it to close at the low. But if it did close at the low, I'd be hesitant because this could act as a resistance EMA bounce point. So ideally, this candle would have broken below the EMA and closed at the low. Unfortunately, it didn't happen. The follow through is nice because this is the trigger bar. If you did this as a first entry short, second entry short, this is a trigger bar after the signal bar. But I also thought this could be a potential low set recount. So you can start the count here. So it could be just a first entry short instead of a second entry short. So I'm actually looking for a lower high below this EMA to feel more confident. And you do get a lower high right here. The problem with this lower high is it closes right at this obvious support point. So you're asking for prices to push down. It is showing bearish signs. but it just felt a little risky and a little dicey. I needed this candle to be a little bit smaller to give me room before this. Now, granted, the support and potential bounce point maybe was actually down here. But I don't know it at the time. And even if it was down here, this is only 2 ticks away. So definitely not worth taking a trade. It would have worked though, but again, I wouldn't have known that would have happened. Then prices continue moving down. This got drifted a little bit, actually a little bit tighter here. So initially, I wasn't sure if this was here because I actually had it tighter up here. And I treated it as a failed breakout, but as it dwelled so long outside, I eventually dragged it down to here and it fit pretty nicely. But there's no real setup here. I did see this as a new high, first entry long pullback, second entry long, bad signal bar, counter trend to the overall bias, left it alone. Pushes, hits the bottom, pushes up. You only have a first entry short. It's a failed breakout of this channel, so I'm expecting potentially a move back in. But this orange up channel also needs to test its high. So it looks like it might have been one attempt. This could be a second attempt, not a good signal bar to go long. It's not even a first entry anything. And it comes pushing back down, so it's new low, first entry short. Technically you have a second entry short here, but it's actually a visual first entry, second entry, and unfortunately you don't get a tick higher for lower high. Pushes down, bounces. It does create a second entry short right here. It's a new low. It's a first entry short pullback. I like that it moved 2 ticks above this guy and then closed at the bottom. Unfortunately, it never broke below this guy. So this is a potential second entry short setup, but also this green down channel already has a breakout on this side. So I'm expecting a potential bounce up here. So I'm actually thinking one leg pullback and then a second leg up to touch and hit this resistance point. So definitely not thinking short, even though I marked it as second entry short because I just like the signal bar, but not really worth a trade taking. Then it creates a lower high. Unfortunately, the lower high is this green candle, and then this follow through is inside this one. So there's really no setup here, but I was thinking, I want to see what happens in the next candle, which was this one. I thought, is this good enough? Well, not really, because this is inside this candle, even though it closed nicely. So there's really no valuable setup here because it's a really big risk that it could be one attempt up, could be a second attempt up. EMA may be holding, may not. It's hard to tell, but definitely not an inside bar worth taking. Then prices continue low, lower, bounces off the bottom of the blue channel, first entry short again, new low. It's first entry short, makes a new low here. It's first entry short. Technically, you have a second entry short. It's a bad signal bar above the EMA, not worth taking. It gets choppy. I don't really know what happened. I did see this big spike and pullback, and it happened really quickly. I do see a potential second entry long here because it's a new high. It's a first entry long pullback. It ticks below this guy, and then it closes and engulfs this one. So technically, it's a hidden first entry pullback, second entry. The problem with the second entry hidden is clearly I'm on a bearish bias. There was an overshoot here, so maybe this is actually higher, but I actually just liked it here and treated it as an overshoot and then the resumption of the sell-off. So this, yes, it's second entry long. Maybe it's going to come up and touch the high. I just didn't like the initial premise of this big spike and pullback. So I really didn't like treating this. It is technically a new high. I just didn't really like trusting a setup based upon this crazy whipsaw action right here. The prices continue moving up. It's a new low. First entry short. Technically, you have a second entry short. Second entry short, this is your signal bar. And he closed green, and then the fall through is a trigger bar. It kind of didn't get past the EMA, so I don't really like this. Plus, it's getting really late in the day now. You have a first entry long. Technically, you have a second entry long. Again, the signal bar is red when you want it to be green. And it just kind of pushes into the close. So kind of a choppy day. There wasn't too many setups I could find. The one setup I took in hindsight really wasn't a good setup at all. I should have been a little bit more disciplined, drawn this short trend channel tighter instead of so big initially. And yeah, it came back and bit me. And the second thing I learned was I need to keep my stop loss or stop order above where it should be logically, not above the original signal bar, which was a bad way to go. Because even if it being a bad trade, I would have survived it in this case. But in this case, probably better that I didn't survive it because I'm going to carry that lesson a little bit more carefully and remember it. So hopefully that was helpful.